And you say, well, what's the catch? And the catch is that it's the only car you're going to get in your lifetime. Now, what are you going to do knowing that that's the only car you're ever going to have and you love that car? You're going to take care of it like you cannot believe. Now, what I'd like to suggest is you're not going to get only one car in your lifetime, but you're going to get one body and one mind, and that's all you're going to get. And that body and mind feels terrific now, but it has to last you a lifetime.
What if the secret to becoming one of the richest men on earth wasn't taking risks, but avoiding them? While Wall Street chased quick profits and flashy trends, one smart man in Omaha did the exact opposite. He studied numbers instead of rumors, prioritized patience over panic, and built a fortune so large that even billionaires sought his advice. This is the story of Warren Buffett, the investor who outsmarted Wall Street by trusting logic when everyone else followed greed. Buffett's fascination with money started early. At 6 years old, he was selling chewing gum door to door. At 11, he bought his first stock, 3 shares of City Service, preferred at $38 each. When the price dropped to $27, he panicked and sold. Days later, it shot up to $200. It was a harsh but life-changing lesson. Patience pays. From that moment, Buffett became obsessed with understanding how money grows, not through luck, but through time. While most kids his age were playing baseball, he was studying the stock market. By the time he graduated high school, he'd already filed his first tax return and owned pinball machines across local barbershops. But what kind of teenager files taxes and runs a business empire before college? After college, Buffett read a book that would change his life forever. The Intelligent Investor by Benjamin Graham. It wasn't extravagant and didn't promise instant wealth. Instead, it taught him a golden rule. Buy stocks that are worth more than their current price. Graham became Buffett's mentor at Columbia Business School. He taught Buffett to look at stocks as businesses, not numbers on a screen, to find value others missed, to think long-term when everyone else thought short-term. But when Buffett offered to work for Graham for free, Graham said no. So Buffett went back to Omaha and decided to start his own partnership with just $105,000 pooled from friends and family. What happened next shocked everyone. Within 10 years, Buffett's investments grew by over 1,500%. He wasn't following trends or taking risks. He was quietly identifying undervalued companies and watching them explode in value. But there was one company that would change his life forever. In 1962, Buffett noticed a struggling textile company called Berkshire Hathaway. It was losing money, but its stock price was cheap, too cheap. He began buying shares, planning to sell them when the price went up slightly. But after a disagreement with the management, Buffett didn't sell. He bought the entire company out of spite. It was a decision he'd later call his worst investment. But from that mistake came genius. Buffett used Berkshire as a shell to buy other businesses, ones that actually made money. He shifted from textiles to insurance, banking, and consumer goods. He invested in companies like Coca-Cola, American Express, and later Apple, all while Wall Street laughed at his old-fashioned methods. But while others were glued to market screens, Buffett was reading. He spent 80% of his day studying businesses. When others chased trends, he waited. When others panicked, he bought more. But who knew that patience would make him one of the wealthiest men in history? So what exactly was his secret? Buffett's strategy was beautifully simple, but almost no one could follow it. He bought companies with strong brands, honest management, and consistent profits. Then he held them for decades. When markets crashed, he didn't sell. When others were afraid, he became greedy. During the 2008 financial crisis, while Wall Street melted down, Buffett invested billions into companies like Goldman Sachs and Bank of America, and walked away with massive profits once the panic faded. But it wasn't luck. Buffett understood human psychology better than most investors ever could. He knew markets weren't driven by numbers alone, but by fear and greed. And he learned how to stay calm when everyone else lost their heads. In his words, "Be fearful when others are greedy, and greedy when others are fearful." Buffett once said his favorite holding period for a stock is forever, and he meant it. While most investors trade daily, Buffett can hold an investment for 30 years. He believes wealth builds slowly, one smart decision at a time. That's why he still lives in the same modest Omaha house he bought in 1958 for $31,500. He drives a normal car, eats at McDonald's, and drinks 5 cans of Coke a day, the same company he owns millions of shares in. To the outside world, that sounds boring. But to Buffett, simplicity is power. He invests only in what he truly understands. No crypto, no trendy tech startups, and no chase for overnight riches. Instead, he focuses on what's proven, predictable, and built to last. And that philosophy has turned $10,000 invested in Berkshire Hathaway in 1965 into over $300 million today. So the question is, if it's that simple, why can't everyone do it? Wall Street runs on emotion. It celebrates short-term wins and chases fast money. But Buffett plays a different game, the long one. While fund managers make hundreds of trades a year, Buffett might make a few. While traders panic over inflation, interest rates, or AI stocks, Buffett sticks to fundamentals. He once said, "The stock market is designed to transfer money from the active to the patient." That patience has made him over $130 billion. But his success isn't only measured in wealth, it's an influence. Investors around the world study his annual letters, hanging on every word like scripture. But Buffett never tried to beat Wall Street. He tried to avoid it. He didn't need to outplay everyone else. He needed to ignore them. That's how he outsmarted the entire system, by refusing to play its game. As of today, Warren Buffett is worth over $150 billion. Yet he is pledged to give away more than 99% of it to charity. He doesn't want to be remembered for the fortune he built, but for the impact he leaves behind. His annual shareholder meetings, often called Woodstock for capitalists, attract tens of thousands of people from around the world. They come not to see a flashy billionaire, but to hear a man who still believes in honesty, humility, and common sense. And even in his 90s, Buffett continues to work every day from his small Omaha office, reading, thinking, and quietly teaching the next generation how to invest not with emotion, but with wisdom. But what's perhaps most incredible is this. In a world obsessed with speed, Buffett proved that patience wins. From a modest home in Omaha to the boardrooms of the world's biggest companies, Warren Buffett didn't just master investing. He redefined what it means to build wealth with patience and principle. And that leaves one final question. If Buffett could outsmart Wall Street by doing the opposite of everyone else, who will be the next to challenge the system and win? Thank you for watching, and we will see you in the next video.